And also from my side, warm welcome. It's great to have you all here. The last time we did a Capital Market Day was in Stockstadt, near Darmstadt. I think it's much cooler to do that here, because that's our main facility. And actually, there's something, there we go. Before really going into the first part of the presentation, I would like to just start here with a lot of pride, actually, because when we look back at the last 3 years, we can see that we achieved quite some track record, starting from 2020, where obviously due to the COVID situation, top line was down. We produced very few engines, and second half of the year was a big struggle with -6% margin, -75 million euro EBIT. So that was a really, really tough year. But then we dug ourselves out of that dark, so to speak, and particular from 21 to 22, we doubled the margin. We brought the top line up to 2 billion euro revenue in 22. Let's also look at the first half year of 23 now. Well, the top line was more than 1 billion euro and margin was more than 6%. So we can proudly say that is actually the best performance DEUTZ has delivered in the last 10 to 15 years. But obviously past is one thing, present and future is something else. So we'll talk much more about the present and the future than about the past. But I think that's a good starting point in today's Capital Market Day. And very important for us as well, we wanted to gain, or maybe saying regain, confidence on the capital market. And I think we've shown that we did that. We delivered our guidance in 21. We met the promises. We delivered the guidance we gave in 22, and we're actually very optimistic that we're also delivering and meeting the guidance we gave for the current fiscal year. So that should be a starting point to give you, but us, all of us together, confidence that we are on the right track. Where we here now is the Innovation Center of DEUTZ, and that's why I think it's a great thing to build sort of the bridge between the present, well, the past, the present, and the future, because just next door here, and you see that here on that grayish, white grayish large building, that's where our assembly lines are located, where we produce pretty much 80% of our engines on an annual basis, and Peter will talk about operations later. So just next door is the core of our operations, not only in Germany but worldwide. And here this is the Innovation Center. That's a fairly recent addition, and a lot of fresh ideas have been developed here. Our teams, particularly our green teams, are meeting here often, discussing, developing ideas and that's why it shows innovation and the present is very close to each other. And I think that's great that we'll have this meeting here, this Capital Market Day today in our Innovation Center. Again, I said we're not going to talk too much about the past. We're going to talk more about the future. But one thing we would like to mention at the very beginning, and that's about the outlook for the current year. Because we also sensed that after we informed on the half-year result, there was a little bit of disappointment by the investors, a little bit of a level of cautiousness on what is the outlook for the second half of the year, in particular going into 24. And that's why we want to give some more detail on the order intake development. And it's a very busy page here, and I'm not going to go through all the details. But one important aspect, we look at our business in 3 regions, EMEA, Americas, and Asia, and then we look at across the application fields, agri, construction, material handling, and stationary equipment. And if you look at EMEA, it's a strong growth over the last 12 months. And there was, particularly in construction equipment, in Q4 22, a bit of a peak in order intake. And that was, and Marcus will later talk about that also, that was particular due to our fixed volume program, where we actually offered our customers to pre-secure business for this year, in particular for sub 4 liter, because in sub 4 liter, the demand was exceeding supply strongly, and that led to construction companies in Europe pre-ordering, and that's where we have that peak in Q4, and then Q1, Q2 is still on a very high level, but obviously not meeting that peak of Q4. So let's say quarter over quarter, we saw some down, but in the general trend is actually very healthy, and also the outlook for the second half of 23 in construction equipment is on the same level, on the same very high level. America is a similar picture. Also, that fixed volume program was a little later secured, the particular material handling. In the US, we have the strongest customers in the material handling, Terex, JLG, and others. So yeah, here you see the strong impact of Q1 23, and here we see actually the outlook for the second half is extremely healthy as well. Different picture for Asia, very clearly speaking. Yeah, China. I mean, after the country opened, it pretty much went down very quickly to, I wouldn't say a standstill, but a very, very low level. And that's why we are the outlook for China, for Asia, but China is our dominant country in Asia, is fairly negative. We don't see that negative for the group performance, because also fairly speaking, honestly speaking, profitability level in China is the lowest of all the regions. So it won't hit our P&L negatively. Sometimes it even does hit our P&L positively if we have less business there. But that's obviously something we want to change going forward. But it was important for us to shine some light on the current level of the order intake. And second picture on that, and to bring that all into perspective, also with the sort of pre-COVID situation. You know, if you look at 2018 and 2019, we had high level of business, more than 200,000 units sold in 2018, 190 in 2019. And you see these numbers represent here the order backlog. The three colors represent again the regions, EMEA, Americas, and Asia. And if we then, obviously we took out COVID because the numbers just don't make sense because everything collapsed. But if you then look at 21, 22, and 23, you see how particular with the Americas and Asia, the order backlog grew significantly by a factor of 4, 5, 6. And that was mainly due to the fact that obviously supply chain chaos was so large that customers also tended to overorder in order to secure that they get some deliveries. And if you look at now 22, 23, well, 22 we closed with 181,000 units sold. Now this year we're going on our guidance 195. And if you look, the order backlog is not twice as large, but almost twice as large, particularly driven by the much bigger bars in Asia and in Americas. And now this is normalizing. So that's a good thing. The whole thing is normalizing. You see EMEA is still on the level we had pre-COVID, but the customer behavior starts to normalize, and obviously that leads to a perceivingly downwards trend in order intake. But if you look at the absolute level, we're actually seeing rather stabilization than some negative impact. And that was important for us to explain that openly here. Because it gives us, and thus it hopefully gives you also the confidence that we are not approaching here a downturn, but rather a stabilization. Right, but I said let's rather talk about the future than talk about the past. Our value proposition going forward, we as a management team together with our teams clearly defined that. We defined our ambition. We want to become a top 3 independent engine producer by 2030 with off-highway competency as we are today, but also expanding where possible to on-highway. Today we're number 4 or 5, depending on how you count. We clearly said we want to become entirely climate neutral by 2050. We need to transform our portfolio and help also our customers transforming their portfolio. I'll speak a lot about that later. We see this from a financial point of view as a cross-financing play, right? Because we are very strong and we have become much stronger over the last years in the whole diesel engine business, including also the service business. We'll spend, and Markus also later, some time on that. And with that stronger performance in the classic business as well as in diesel, we're going to fund and finance the transformation. When we grow, we want to grow profitably, very profitably, particular on classic and on service. And in the end, it's a value play. You know, we don't want to grow without paying dividends. We continue to be a reliable dividend payer throughout that part of the transformation. We ensure the world keeps moving. That is our claim. That's our ambition. And we do that across the fields we're today represented in. Construction, our largest field. Material handling, particularly in the US, our largest field. Agri, stationary equipment, and also others, which includes the Torqeedo business. And we do that in a technology open approach with diesel engines, with engines powered by e-fuels, HVO, hydrogen, and obviously electrical, but Markus will spend much more time later on the technology approach. For me, it's just important to say we are here to ensure the world keeps moving, and we'll do that in a technology open approach. But that's nothing new. Important is that if you want to have that claim, if you have that claim that we are doing that and we're benefiting from important megatrends, that we are in areas where we not only have a right to play, but where we have a right to win. And we'll take out some key developments, some megatrends. One megatrend is urbanization and population growth. I think we all have consensus that the world population is continuing to grow. We see numbers of 10 billion human beings by 2080. And obviously more people in the world means people need food, people need to live, need places to live, and people need to move. And that's just the three trends we are actually very strongly represented in: agricultural equipment, construction demand, and of course mobility. So that's one important field we're in and we're going to stay in. The other big opportunity for DEUTZ is the whole climate protection and energy mix. We all know that obviously with different speeds and different regions, we're going to see 50% renewable energy by 2050. And that's a huge opportunity for us, that we're actually growing in not only new drive system, but also in ecosystems and business models where I'll talk about later. And obviously it also means there's a need for more and different forms of energy generation. Gensets, for example, microgrids, all areas where we are somehow represented in today, but not as big as we could be. And last but not least, the trend of e-commerce and digitalization. Material handling, particularly in the US, but also in Europe, is a strong field for us. And we expect that market, that sector, to grow by more than 7% throughout the decade. And there is a higher need for material handling. The value chains become more localized. That again will need more equipment, particular equipment powered by DEUTZ engines, and that's another huge also innovation opportunity for the ecosystems around the drivetrain. So what we clearly say, we expect the markets we are represented in to grow above, slightly at least above GDP throughout the current decade. And moving now to technology. So today we are focused rather on the lower power range, starting at 19 kilowatts, our smallest engine at 19 kilowatts, up to 250. We do have some products higher than 250 kilowatts, but the main focus of our portfolio is in that power range. And we're actually mainly in mobile equipment, whether it's going to be urban or whether it's going to be remote, but we're not that strongly represented in stationary equipment, which is urban or remote. So that's clearly a field for us to grow, which we're actively approaching with our portfolio exercises in the teams. And if you look at the technology path, we see that here, obviously for electrification, we expect that to grow fairly quickly in the lower power ranges. But if you look at medium to higher power ranges, there are different possibilities. There's the possibility, the already available possibility using refuels. There's the already available possibility using hydrogen. We'll hear a lot about our hydrogen engine later. And there's also the possibility using fuel cell. That's a field where we're not that largely represented in. And for the higher power ranges, and that's clear, that's going to be a future stronghold of DEUTZ. There's the path is already there, including actually an important role which diesel engine will still play over the next decades, but obviously then also refuels and hydrogen. So there is a high potential for us in diversifying the portfolio into different technologies, particularly when it comes to higher power ranges. If you look at how this translates then in our strategy, I think that's a picture which most of you have seen in several interactions on capital market events or on one-on-ones. So where we are today is here on the left-hand side. We produce and sell, give or take, 200,000 engines. On a good, if the demand is strong, it can be 220, 230, but it could also be 180, 190. And today, this is all diesel. This is all diesel, and obviously the large number, the volume comes from the lower and medium power ranges. In that area, and that diesel, well, it's still growing. It's still growing, but at some point, probably mid or the end of the decade, we expect here electrification to start cannibalizing a little bit. And that's a chance for us. I'm starting now not with number one, but with number three. So that's where we have the need that we are offering here electrical drive systems, and we'll hear later that we'll have a lot of products available, but the demand of the customers is not as strong yet, because that's still very strong as diesel. And then, and using this strong demand of diesel, but also the need for electrification. We'll talk about the consolidation game later. There is going to be a strong area for us and chance to play an active role in consolidation with the combustion engine technology, at least for the next 10 to 20 years. We've shown that here on that chart with a slight area of gray. I personally believe that could be a much larger area of gray to grow, but we will go through that throughout the presentation. And then obviously the role we have for the combustion engine for decarbonization is also strongly supported by use of refuels and hydrogen. Because that's already today available, at least for refuels, the technology is ready to be used for refuels. And last but not least, we see adjacencies to become more and more relevant for us, because when we want to serve our customer needs, they have more and more also the desire to be supported by us in ecosystems around just the engine. There's more than just the engines, whether it's going to be different technologies, we'll come to that later, or also different business models. So that's our overall path, how we transform our portfolio over the next years, and probably not only years, but decades. And that's how we translated it into our Dual Plus strategy. So first big block, we continue to grow our classic business by performance and consolidation. Bring up the margin and grow, also in particular inorganically. Secondly, expand our already very profitable service business to fund the transformation. And last but not least, build up really a green ecosystem with product and technologies, and that's really focused investment, growth, and also to ensure the long-term viability of DEUTZ. If you now look at how we translate that into our value play, particularly the service, because that's the big margin business, and we're already quite strong, but we'll show later that there's much more to come. The potential is still huge. The more we expand our service business, the more we lift up the P&L, and we can do that particular also with rather quick return on investment M&As. We've shown a few good examples the last years. So if we grow the service business, it helps us really financing the consolidation in classic and also investment in green. And with that growing, profitable, consolidated business, we're going to really contribute to the green investments in the mid and long term. And if I now spend some time on classic to start with. So the two big blocks, consolidation and growth, as well as performance. And the market in the classic business is clearly showing tendencies to consolidate. There are players that are already leaving the market, or that are considering leaving the market, and that are going to leave the market. And we want to use these opportunities arising out of that by actively taking over business and really positioning ourselves as an active consolidator. We may call it sunset play, some people call it last man standing. We don't like the word sunset play, is nicer, because last man standing, at some point the last man is also falling, right? That's not the nicest idea, because we don't want to be then at some point falling over. And the other aspect is improving performance. We want to really make more efficient use of what we have, our existing capacities, and Petra will speak a bit about that in her part later. Again, all with the objective to become one of the top 3 independent engine producers by 2030. When I talk about consolidation, we see that already quite clearly on the on-highway market, particularly in the automotive space. I mean, if you look back, the number of engine platforms has decreased significantly over the last 8 to 10 years, 17% from 15 to 2023, and we expect, or people expect, that number to decrease further. And the logic is quite clear. There are more and more OEMs in particular. Obviously, they're either outsource or entering into partnerships when it comes to combustion engine platforms, because volume decreases. So you need to focus your R&D. You need to focus other resources, production resources, capabilities, etc. And Renault, for example, outsourced the ICE production to the joint venture with Geely, and other players considering and doing similar things. Not always on the surface, because obviously, particularly in countries like Germany, it is a critical discussion as well, but it's happening, and it's happening fast. So in our field, in our area of the off-highway, we see it and we expect the same tendencies, just a bit later, slightly delayed. And there are first examples, one we have actively participated in, the one with Daimler, but there's more to come, and there are lots of discussion happening in the background where we're also taking part in. And that in the end, that benefits smaller scale, particular independent companies like DEUTZ. Because a company like us, we don't run the risk of perceived going into a channel conflict. So the more independent you are, the more likely you are an agreeable partner for companies entering into consolidation options. How we approach that? Obviously, we want to do it as structuredly as possible. Sometimes you need to take an opportunity when it's around. But in principle, we want to do it as structurally as possible. So to do it in regions and markets where we already play a role, which we know, and also ideally in industry areas where we already play a role, which we know. So it needs to fit to our portfolio and to our markets. And not only for cultural reasons, that plays an important role as well, but also to really go and exploit and utilize synergies by output and performance. So that's one important aspect. And of course, it needs to be in alignment with our culture and our values. And when we took over earlier this year, the IP and the licenses from Daimler Truck, that is already a first, I think, very strong proof point that we do not only talk about it, but we take it seriously. That was our first point, as said. So what we did earlier this year, and we closed this in the first quarter, we took over the IP and the licenses of Daimler Truck's medium-duty and heavy-duty engine platforms, and now the closing is completed, as said, and now we're integrating everything, including particular R&D, production, supply chain, procurement. So that's a major project, but it's going really well, and we are already working here in tapping into new customer fields because these engines really bring us new opportunities which we haven't had so far before. So we expect here the production of those Daimler engines under our responsibility by the end of the decade, 27, potentially 28. And initially we're going to see a double-digit top-line figure coming into our books, but by the end of the decade it's going to be a three-digit million euro figures, roughly by 29. Other aspect of performance, pretty much I would say the success story of DEUTZ in the last year, that we really completely redesigned, redeveloped our pricing approach. The go-to-market approach was completely new designed. We took the opportunity which the market gave us, because the environment in 22 was obviously very, very challenging for every player in the market. Inflation was high, cost pressure was high. It was already starting in a challenging situation in 22, but then when Russia attacked the Ukraine, the whole situation got even accelerated, and we reacted extremely early. By February, where other companies, I believe, were just evaluating, we immediately reacted, and we said we're going to change here our structures, we're going to change our approach, and we targeted to increase prices across the portfolio by 8 to 12%. We announced that in February. And if we look back what we achieved, we can say we clearly much achieved it. Marcos and the sales team have done here a tremendous job in going to the customers completely different fashion, and actually using also the self-confidence that we've got something to offer, rather than just feeling, okay, we can do only what the customers in the end want from us. So that was successful. It helped us to repair some parts of the portfolio significantly, and it also, that was almost a byproduct of that exercise. We realized that then throughout 22 into 23 and potentially even into 24, for the smallest engine, the sub 4 liter, demand was so much stronger than supply, so that we created and implemented a fixed volume program where in the end we secured more than 75% of our engine production capacity by fixed contracts to the customers. And that obviously gives us at the moment a lot of certainty in delivering here the engines in that category, including, as Petra will explain later, ramping up a third shift here at the assembly line 5 just next door. So that was a very positive impact on profitability. It helped us doubling the margin from 21 to 22, and also enabling the next shift here into 23 and beyond. Operating performance indicators are also showing in the right direction. Supplier performance is now back to above 85%. Okay, the situation is much more stable than before COVID and the start of the Ukraine war. Customer delivery performance increased significantly, but here we have to be honest, it's not on the level we want it to be. So that's certainly still room to improve. But what I like particularly is that the efficiency in production has grown 12% per year, particularly in the area here for sub 4 liter, where we installed a new line in 2020, and things are moving not only in the right direction, but really strongly ahead. But Petra will explain more about that when she's going to present it. And the good news is always that's not the end of it. There is still a lot of more potential when it comes to operating performance. Let me move on to green. So here, the approach is obviously completely different than when we talk about classic and later on service. So first of all, we want to build on what we already have, because we don't start from zero. We've got a lot here developed over the last 5 to 6 years. We want to actively explore the opportunities the market is going to give us, because it's a different market. Let's always remember, when we talk about combustion engines, obviously there are innovations, but there's a lot of progress is driven by the regulatory environment. Whenever there are new emission rules coming in, well, then the companies need to see how they comply with that. But with the whole field of green, that's different, because no one tells you what the product needs to look like. We need to actively develop the needs of the customers with the customers, and sometimes we feel we need to be even faster than the customers to tell them what they really need, and that's obviously a completely different approach. We'll come to why that is important later, because we will also then we will be creating a new structure, and very importantly, we'll build ecosystems rather than just one product. Let me start with a short outlook on organization. We have decided as board to create a new dedicated green organization to master and succeed in our transformation, to really give the green transformation a stronger strategic focus. Because otherwise, an organization like DEUTZ is focused very much on the operational day-to-day, sometimes firefighting. In the last 2 years, no day was like the previous day. There was always something to fix immediately. A production issue, a supply chain issue, a customer issue. And when this is your environment, you're very good at fighting fires, but you're never good at developing something which is important in 5 years. Because in that case, the urgent beats the important, and that is not a good ingredient or a good basis for transformation. So we said we need to give the green transformation a strategic focus. We need to become more customer-centric. I mean, that's what you always say. Everyone wants to become customer-centric, but we need to really support our customers developing, finding their needs. And that's something, because what is challenging for us, as I said about the firefighting, it's not that our customers had no fires to be fought. So here we need to become more customer-centric. We need to be faster in decision-making and ramp-up, and we need to be much more flexible than you are at an organization like DEUTZ, which has next year a history of 160 years. So we will hire an external CEO to lead that green organization, and that CEO and that organization will then report to the entire to the business, to the management board here. So there's more to come, but there's already very clear statement. We're going to now take it very seriously, that green transformation. And not only focusing on the technology, but also particular on the go-to-market and on speed. We build on what we already have, and that's quite a lot. So let's not undersell what we have, because over the last years, we developed an electrification, a BEV a toolbox with lots of products which are ready. We'll hear from Markus later about that. We developed the first hydrogen combustion engine, the TCG 7.8, which is ready for the market. And we developed also first products which we would call as part of the ecosystems, the adjacencies, for example, the power tree, which you've heard before, and which, by the way, we also show outside here in our little show area. And the focus right now is really shifting these products from pilot into serial production. And there are quite a few promising signals from the market and from the customers. Let me speak a bit about the hydrogen combustion engine, I would call it almost a signature project in green, the TCG 7.8. And we can imagine a lot of different areas of application. Obviously, stationary, I will speak a little bit about that. In power generation, we have, and we're not going to repeat that because you've seen that many, many times. We have started this demonstrator project here in Cologne with Rheinenergie, but we've got more to report on that right now. We are exploring opportunities with rail applications on regional trains or special vehicles, pretty much trains which are in use on non-electrified routes. And we can also imagine, and not only imagine, we can see the hydrogen combustion engine in any other large off-highway applications like excavators or in the mining area. And there is even the potential to go, obviously, on the on-highway business, but that's something which is not at the moment our focus. There's one very interesting area to explore for us. It's in China for the hydrogen combustion engine. So we are at the moment in the process of negotiating a first serial order of 100 H2 engines, which will be run in gensets in an industrial park in an area of China in Inner Mongolia. I spent 3 days there last week, and what I saw was very impressive. We have just shown some pictures here, but what you can imagine there is an area which is more than 40 square kilometers, where the Chinese government has moved about 60% of the semi-coke production over the last 2 decades into this area to pretty much take pollution away from the coasts, like, not solving the problem, but moving the problem somewhere else. That's what they've done, but at some point, if you move a problem and don't solve it, the problem does not go away. You just have it somewhere else. And now, with the Chinese governmental strategy to become climate neutral by 2035, they say, okay, we're going to tackle that. And when you walk around there, you see, I think it's about 126 semi-coke plants. And a coke plant, it's a big industrial area. And what happens there in the end? Well, you produce coke, and as a byproduct, there is coke oven gas going, in that case, in the atmosphere. And they're flaring it off. So you see lots of fires there. And so that's not great for the environment. It's also not great for the economy and because you waste a lot of resources. And what they have in mind there is to purify that gas, which consists about 22-23% of hydrogen, take out the hydrogen pretty much and utilize the hydrogen to turn it to electricity. And that's a perfect area of application for our hydrogen combustion engine applied in a genset. So what we're negotiating with them at the moment to deliver the first 100 gensets potentially next year, and then enter into a larger serial orders for that. And that is, I think, really a fantastic area of application for our product. And we'll believe once we show that this is working, we will see much, much more potential and fantasy coming out of that also in other parts of the world. So here again, more to come. But I think the first 100 products is already quite something to be proud of. And so it's a big step, at least from one area, from one demonstration with Rheinenergie to now 100 in China. Adding a bit of complexity, but that's something we are very good at. Yes, let me move on to the whole questions of ecosystems and adjacency. So it's extremely important that we as DEUTZ transform here also our, let's say, mindset, understanding. If you enter the company, you see DEUTZ, the engine company. And obviously we want to keep to be perceived as the engine company, but we want to be more than just the engine company. So, and that's why we need to understand what are really the customer needs in their own green transformation. And yes, there is the electrification competence, particular for those players who do not have an own large-scale electrification competence center, including aspects like functional safety. Well, Markus will also give some insights on later. There is H2 competence, and H2 is not only an H2 combustion engine, it's all fields around that, fueling, storage. These are all fields where a lot of players do not have expertise, and there's a lot of concern. And then obviously the question, are these new technologies stable in the use phase? It's not only TCO, but it's sometimes really stability and availability. And that's something where we as DEUTZ have capabilities. We're offering a wide range of products. as you see, we have a deep knowledge of the customer needs purely because we've serving these customers for decades. And let's not forget, we have a very strong, very large service network all over the world, so that the customers know when they install new products in their applications, we don't leave them alone. So when they have a problem, we are around. And that's, by the way, a big difference from a company like DEUTZ to startups who bring premature products into the markets, and then it's fire and forget for the customers. So that means it's a huge opportunity for us. We can extend here our role in the value chain. It's not only having a right to play, but also having the right to win. And we can build and develop these green ecosystem around off-highway applications, using, as I said, our service footprint, and tap by doing that also into playing fields, into growth fields, which are today not part of our portfolio. And this is just, how that looks like. Obviously, you're used to, or typically, you want to stay very close to what today your core is. And that would just mean taking out a combustion engine and bringing in a battery electric system. But we want to grow away from that as long as it helps us supporting our customers in their own green transformation, going into infrastructure, digitization, and so on and so forth. Again, Markus will go into more detail in his part of the presentation. Let me move on to service now, the third field of our Dual Plus strategy. Here, this is already quite a success story over the last years. We started with a mere 250 million revenue in 2015. We grew that by 9% year over year. 22, we closed with 450 million. And we clearly stated by 25 we want to go on the level of 600 million, and we're well on track this year, probably just falling shy of 500. And let's remember here, the business is highly profitable. So we want to do that with more M&A, because there is still a lot of potential out there. We want to broaden our geographical reach with a focus on the Americas and on Europe. And we are also very happy to take over more service activities in terms of billable hours. We are very much focused on spare parts today, but as you can imagine, with the billable hours, there's a lot of money to be made and a lot of trust to be won with our customers. And we also want to obviously ramp up or further grow organically, really also actively targeting third-party business rather than just focusing on existing DEUTZ business. And one thing is clear, there is a lot of market potential out there, both in terms of market potential for DEUTZ itself, but also for actively going into third-party business, and that applies to both spare parts with a 16 billion global market as well as billable hours with a 10 billion euro global market. So we are very confident that with all our measures, we move here our share upwards to larger numbers. And the plan is very specific, very clear for the next year in particular. As I said, 600 million, it's a CAGR of 10%, so that's a CAGR higher than what the market is going to grow. But as I said, we're going to do that organically and inorganically. In particular for M&A, we developed very strict investment criteria. We want to do quite a few, but not too many acquisitions, because an organization like DEUTZ needs to also be able to master those acquisitions. And every acquisition takes effort and time, whether it's going to be a 5 million business or a 500 million business. So it all takes resources. So what we assess at the moment, we're going to do probably another 4 to 5 M&As until 25. And whatever we acquire, it should have a sufficient number of technicians. So it's not just for spare parts, because again, we want to improve here or increase our billable hours. There we need people for. Obviously, the margin need to be higher than what we currently have with DEUTZ. It should not be margin diluting. It should be margin enhancing. And the growth rate we want to see there is positive over the last 3 years, because that's a good indication that we're going to grow also in the future. And geographically, as said, focus on Europe and the Americas. And typically, and that's not written on the slides, the multiples we pay for this are fairly low. So the whole question of, okay, what is this business doing in 10 or 15 years? Yes, it's relevant. We don't want to just buy something to use for 3 years, but it's at least almost a no regret moves, because the multiples are between 3 and 5 at most, and they help us also in supporting the green transformation going forward. The two recent acquisitions we concluded are perfectly in line with the criteria. We closed the end of July. We closed the acquisition of Schulte in Chile. So that's on top revenue of 15 million euros, 17 technicians in 2 countries in South America. Margin is well above DEUTZ, growth rate 16%. And yes, in South America, which is apart from a little a little setup in Brazil, it's a really a new field for us, and we're managing that by our US organization for the time being. Similar, but obviously also completely different in terms of geography. Our current acquisition called Diesel Motor Nordics, which strengthens the Nordics in Sweden, Denmark, and Finland. We also talk here about on top revenue of 10 million euros. We have 12 technicians, margin also well above DEUTZ, and growth rate over the last 3 years, 16%. So we show, you know, these acquisitions meet perfect our criteria, so will the next M&As we're doing in service. But it's not only about growing like traditionally, organically, or via M&A. It's also tapping into new fields. And we have started a partnership with a company called Talpa Solution. It's Essen-based company. It's a telemetric solution called Fusion Hub, which really strengthens our digital business model, or really actually entering into digital business model. And the rationale is quite clear. If you look globally at heavy industry production, you can see that 5% of the global heavy industry production is lost due to some unplanned downtime. And when you translate that into money, that results into a problem for the industry of 600 billion euro. I'm not going to say we're going to solve all that, but it shows there is a lot of potential to be attacked. And with Fusion Hub, we create a platform using a telemetric box, which not only focuses on the engine, but also on other parts of the vehicle. And for us as DEUTZ, it gives several revenue streams. So first of all, a recurring revenue stream because we're selling these boxes to the customers, and then the customers pay a fee to be part of that platform. They can even build their own white label app, which gives us some revenue, but that's all like the participation fee to an extent. But I believe, or we are convinced, more relevant is what we see on the right side, the revenue share, because if we and the platform has all the information on problems and data out of that vehicle, obviously we as DEUTZ can go much more targeted approach here our service business to them, and we can also sell access to this platform for other players, like for example a tire producer who then knows exactly when to have which product in store. So that's a new product, a new business model for us. And in year 1, we can already see an order intake of 6 million euros, and we'll expect some strong growth over the next year. So it's a little plant which is starting to grow, but it shows we're thinking well beyond the traditional service business. Let me spend a few words on our regional strategies, our regional footprint. So one thing is clear, our region EMEA, well, focus actually Europe, not so much MEA, but that's our largest region. In 22, it had a 61% share of revenue. It grew well, 20% CAGR since 2020. And this is our home base. And we want to leverage this as our home base because we've got here the production footprint, and we've got also good profitability. We've got very, very well-established customer base here, and that is clearly our home base, which we want to further strengthen. Construction, agricultural, and material handling. And also the focus on the growth and service, very strong in Europe, as shown by both the acquisition in the Nordics as well as the telemetric approach with Talpa. But EMEA plays a very important role for our green strategy, because here we really want to move now from the prototypes to at least small-scale serial production, and most of the products and the projects we're currently following, as Markus will show in a few minutes, are here with customers in Europe. So the strategic focus for EMEA is on all aspects of Dual Plus. In Americas, it's also a success story over the last years. With 23%, it's our second largest region. It grew tremendously since 2020, 40%. So that's extremely strong. And obviously here, as said before, we are particularly strong in the rental business, material handling. Our largest customers are there. And it's very focused on classic and service. Green tech, obviously, yes, plays a role and will take every opportunity we see, but the whole mindset in the US in our segments is not so much green oriented. It's rather, hey, well, diesel is quite a good product, and please don't stop providing diesel engines. So whenever we speak to American customers, we come back and say, oh, do we really need a green transformation? Yeah, let's talk to some European customers, and when we get the answer to that. But it's a perfect example why Dual Plus makes so much sense, because you can imagine, you know, the people, particularly in the flyover states, they're very skeptical about green transformation. And that's a good thing for us, because it shows that here, the runway of the diesel probably takes at least 5 to 10 years longer than it is in other countries. So the focus is, yes, as I said, also in service. I mean, just we opened I think the 9th DEUTZ Power Center in the US this year. We have a lot of technicians in vans there, so it's a strong development in service, and that's why the focus, I would rather say, is in classic and service, and green, at least today, rather opportunity driven. Asia Pacific, a little bit the most challenging part of our portfolio, the smallest as well, 16%, grew the lowest over the last years, also driven by China, because it took them a long time, and it's still taking them a long time to get out of that COVID dip. So we want to expand the rather limited presence in China, and obviously also APAC, and we want to continue to ramp up here production with more localized parts, China for China, but also where possible, China for the rest of the world, where there is no issue with import tariffs and duties and logistics. And when I look at green, here we see it rather focused on the hydrogen technology, as I said earlier, because battery electric technology, and this not only applies for the car makers, that's where China is well advanced, and there's not so much they can learn from us. But on the hydrogen, we've got not only a right to play, we've got a right to win here. Well, how this translates into numbers, Timo will spend much more time on numbers later, but I can't spare you at least with that very high level bridge here. 22 were closed at a, well, still small, but for given where we come from, not bad, 4.6%, and we want to grow with performance and growth, the two blocks to the midterm target of 6 to 7%. In our classic business, we are already well above the 6 to 7%. I think it was almost 9% first half year 23. So we see there is potential, and the profitability growth comes mainly from classic pricing, as I said earlier, and the operational efficiencies. Service growth plays a very important role. Let's remember quick ROI M&A. That helps a lot, and obviously also we'll bring in our new engine products into the market, and we'll bring them only profitably in the market. That's a different approach than DEUTZ has done over the last couple of decades. When we think about our midterm guidance, looking at 25, we are well on track. Sales, we see at or above 2.5 billion euros. Service at the 600. As I said, well on track, maybe just shy of 500 this year. Margin 6 to 7%, free cash flow margin 4 to 5%. Working capital needs to get down. Petra will talk a bit about that. Also as a result of the stabilization of order behavior and supply chain situations. And dividend, very important. We want to maintain a stable dividend payout ratio, which translates into increasing dividends in absolute terms, because we're going to bring the net income gradually further up over the next years. We're also, in terms of ESG, we're progressing well. The various ratings show a clear upward or improving trend. And obviously we do not engage into an ESG strategy to improve the ratings. That's just a side effect on on achieving our goal to become climate neutral by no later than 2050. And if you look at our technology mix, and that here is the chart we've shown earlier on the technology distribution, on the development of the technology, and here we translated that into the use phase emissions of our products. And we can say very clearly, I mean, we did our homework already. All new combustion engines we bring onto the market are already refuel ready. And when I say refuel, I mean biofuels as well as HBO. So obviously the higher these refuels get into the use of our engines, the lower the CO2 emissions. And in a theoretical, hopefully it turns into real life scenario where 100% refuels were possible, we could already reduce 90% of our emissions. And when I say our emissions, That's use phase emission. And use phase emissions for our products account for more than 97% of the overall emissions. So in production, the emissions are almost negligible in our side. So there is a lot of potential, and as I said, we're well on track. Obviously, we need to continue to invest into alternative drive systems, but already by simply increasing the share of refuels, we can move very successfully and quickly towards CO2 neutrality. Summarizing our strategic approach over the next years, in the short term, in the midterm, and in the long term. On Classic, the short term consolidation, focus on performance, deals like the one with Daimler Truck, preparing most, and that continues over the midterm as well. Obviously, further consolidation and integrating what we've done. And in 2030, then at the latest, obviously playing that strength out. In terms of green, now creating really the strategy and the operating model, including organization, organic, inorganic ramp up from prototype into serial. That is also throughout 26 to 2030. And obviously scale that business up significantly beyond 2030. So that seems like a long shot, but we need to be honest and show here the truth. This is in our industry not something where we need to be completed in 2 years. Service for the next 2 years really continue to reach the 600 million. Further increase third-party business. That's where really huge opportunities are around. In the second half of the decade, we will launch a second wave of M&A, moving to the next large number of service revenue, which one can imagine. Obviously also entering into new digital business models like the telemetric example I gave earlier. And in 2030 at the latest, obviously it's important to shift also the service focus more from classic to green. And that's great because then we're going to be around with a strong network, and that helps us really in entering all this potential. So, and obviously in parallel, really strengthening our footprint in the various regions, but don't want to go through that in more detail. So, I hope that gave you a first insight, run through our view on the strategy. Later, after a short coffee break, Petra will then spend some more time on Classic, particularly with a focus on operations efficiency. Then we'll hear from Markus more about service and green. And last but not least, Timo will wrap it up and translate that all into numbers. Then I'll give a short summary, and then we'll have some time to go outside and see actually real stuff rather than PowerPoint slides. So for the time being, thanks for the attention. Let's enjoy some coffee, and we'll be back in 5 minutes, right? 10 minutes?
Yeah, just very quickly, 15 minutes coffee break.
All right.
Maybe a little bit shorter than initially planned to run a little bit over time. And I know